Joining us now is Democratic Congressman Paul Kanjorski of Pennsylvania. He's chairman of the House Financial Services Subcommittee on Capital Markets. His subcommittee held hearings recently on life settlements. Congressman, how bad is this? How outraged should we be?
Well, David, it's not as bad as it could be. Right now, it's about on a yearly basis, $18 billion of these life settlements are being sold off. So that's not catastrophic. But I think we have to look at whether or not Wall Street learned anything from the disaster last year and the last few years. And that is, are we willing to turn our society into a casino and bet on anything, including life? You know, I won't be surprised that if in 6 months somebody doesn't sell you a policy when you get married, betting on the divorce question and taking a sales on something like that. We ought to redirect ourselves, it seems to me, after this terrible experience that we've had for the last year, in realizing that those who are in charge and the stewards of our financial markets of the United States and the world, first and foremost, are giving an extraordinary power and opportunity to serve civilization. And setting up a casino to bet on lives and death is not necessarily the best use of their time and effort.
It does sound like good news that it's only $18 billion, because that's just, I suppose, a drop in the bucket. But on the other hand, that's $18 billion of bets that are essentially morally repugnant. I mean, is there anything that Congress can do or get the SEC to do to stop this?
Well, you put the key word. Mary Shapiro and the SEC are doing an analysis and a study, and we're looking at them to come up with, of course, some recommendations. And I think the reason I held the hearing is we wanted to highlight the fact that this was happening and raise the question, was this the right path or right direction for the financial markets and Wall Street to take, particularly after our experiences with subprime lending? You know, there's a side comment to this, too. The Germans are great purchasers of these securities, and there was an article in one of their popular magazines indicating that because the people weren't dying fast enough in the United States, there was a lot of disappointment in Germany for that happening, and it goes to the essence of what we're doing here. There was a common principle in insurance law that you had to have an insurable interest. Now, through this mechanism of converting an insurance policy into just a contract that can be bought and sold, we now have this extreme change of circumstance that raises a lot of questions as to the values of our society.
And what are you hearing back? What did your committee hear back from Goldman Sachs, J.P. Morgan, the rest that are still involved in this?
Well, they cooperated and appeared voluntarily before the committee, and that was very good. They didn't have to, and we didn't issue subpoenas. But and the testimony, as I gathered it from them, was this is not their new thing. They are not going to spend a lot of time on it. But I'm sure there will be people spending things. Now, let me say that there are some reasons why this may be healthy, and that is the insurance industry has inadequately paid surrender values that they should be paying to life insurance holders in this country. So this is a mechanism to balance the market in a way, but it's sort of a disturbing mechanism to use that way. And I suppose there are companies that are doing this, and they're probably having a positive effect on the surrender value increase of insurance policies. But I would hope that they would concentrate their time on more efficient and more effective use of capital for the benefit of creating jobs and getting us back into recovery and prosperity.
Democratic Congressman Paul Kanjorski of Pennsylvania. Congressman, thanks for coming on today. Good of you to join us. We appreciate it.